Despite OPEC Plus's pledge to increase oil output by 411,000 barrels per day in May, analysts at Morgan Stanley say actual production has barely changed, especially from Saudi Arabia. Their data, drawn from refinery flows, exports, and inventories, suggest only modest increases, with a 420,000 barrels per day rise expected between June and September, likely tipping the market into surplus amid rising non-OPEC plus outputs. Femi Oladehin, senior partner at Argentil Capital, joins me now for the conversation. It's great to have you in.
Always a pleasure on your show. How are you?
I'm very well, thank you, and hope you are too. Considering this news, a shortfall from OPEC Plus's projections, are you surprised by it? Was it expected?
I would say not big surprises there. I think technically people would understand that to restart production in all fields that have been shut in is not exactly just as going back to them and just switching on the pumps and the pumps start to pump out. There is quite a technical process that goes on before that happens. We know that there are specific countries who were supposed to be responsible for the increase in the output in the OPEC plus production. But don't forget that some of those countries were already overproducing in the past. So Iraq, for example, had significant overproduction prior to these adjustments. Saudi Arabia, who was the biggest the biggest cutter over the last 12 months, also needed to ramp up production very quickly. But what has happened is that production is coming on stream, albeit at a very slow pace. And my expectation is that as we get closer to June figures and July figures, we'll start to see those numbers creep up as well. Don't also forget that crude oil prices have kind of stabilized around the $65, $66 price point. So there's a bit more incentive for those guys to bring production back on stream. I guess on the other side, Nigeria still continues to be a laggard. When it comes to production, we still haven't met our production targets in the last almost 3-4 years. And that is something that obviously the market is going to have to get used to. But what I would say is that the fact that they hadn't hit the 411,000 barrel benchmark has contributed to prices staying around the $65, $66 price point. If we do see increased production, especially as we're expecting a supply surplus, that could start to impact prices as soon as probably even June or July deliveries.
Indeed, and we'll come to the impact on the global market. But we have 5 OPEC Plus members who fell short by 40% below the target. There are those who are suggesting that this is basically echoing Kazakhstan's position. We know where they have been out with non-compliance. Do you see this as a compliance issue within the alliance, or it's just simply they have been overproducing before? It's going to take quite some time for them to meet up. What are your thoughts on that compliance element within the OPEC Plus alliance?
I would say it's a combination of both. Look, the truth is that for Saudi Arabia, for example, price is not a problem. They've consistently said that they don't really care about where the price is. They're more focused on production. But for the other smaller producers, price is an issue. And if price goes lower than a particular level, say $60 mark, certain countries start to struggle. Nigeria, for example, Nigeria's budget was premised on the $75 crude price. So if we see sustained price reductions, a $10 price off Nigeria's budget is significant for its public finances. So I would say that, yes, the alliance is still holding, but everyone is a bit cautious when it comes to restarting production, because the implication of restarting production without any element of control on pricing could mean that significant budget shortfalls would be what a lot of the OPEC Plus countries will be dealing with.
Mm-hmm. And perhaps there's something Nigeria can learn there from Saudi Arabia. I mean, they're more concerned about, production and their market share, right, than not so moved by the price. But give us a picture of the impact on the wider market of this increased output and even the shortfall right now from OPEC Plus's projections.
So the biggest impact when production either shifts either positively or negatively is usually on pricing. As your viewers would also know, the principles of demand and supply always have an effect on equilibrium prices. We have a situation where the US, for example, and South Africa and a few other countries have seen significant increases in their stockpiles. Now, what that means is that it will take some time before we start to see the impact of production increases on price. But the flip side of that is that if the global economy continues to struggle, as we've seen in the first half of the year, driven by the Trump tariff madness, then intuitively, we're going to start seeing that impact on crude oil supply and crude oil prices. So finding a balance for the market is very important now, wherein balancing between oversupply, which could significantly damage the long-term prospects of some of the countries, and price, moderation, which could be positive for the global economy. Finding that balance is a delicate work that OPEC Plus need to find. And I think that they will continue to put their eyes on what the US is doing around trade. They'll continue to put their eyes on what the US is doing around its stockpiles and Donald Trump's, very eccentric behavior when it comes to economic policy. And I think those will be the key drivers of the market going forward.
I mean, so many moving pieces, but we'll see how this pans out. But there are expectations that global oil demand is only expected to grow by 800,000 barrels per day, while supply increases by over 1.5 million barrels per day. Are we looking at a prolonged period of lower oil prices here?
So interestingly, if you look at the forward curve for crude oil prices, the expectation from the market is that crude oil is on a downward slope. And we don't even expect to see $75, $80 crude probably for another 18 months or 2 years. And I alluded to the fact that the stress to global production driven by the US tariff wars is also something that will take time to bleed through the system. If you recall, when we had the COVID shut-in, it took time for production to revamp. It took time for the economy to rebound from those sort of disruptions. And we're having those disruptions again in trade. We're having those disruptions again in production. The expectation is that hopefully the Russia-Ukraine war will start to ebb out in the next few weeks or next few months. All of this means that when you look at the forward curve, the forward trajectory for crude oil prices, it's at the best flat to lower. And I think that will drive the way a lot of people are looking at the market.
I mean, it was interesting you brought up Russia-Ukraine there, especially with the sanctions. I heard there's still sanctions, long-term sanctions, hanging above Russian energy. But perhaps we'll have that conversation and the impact later on. Let's focus on Nigeria now. Crude oil prices are hovering mid-$60, 66 or so per barrel. What are your projections for Nigeria? All things considered, considering the budget benchmark is at what, $70 per barrel? So how should Nigeria move with all these moving pieces, OPEC Plus's projections, and so on and so forth?
So Nigeria, as you know, is on a recovery tangent. So by recovery tangent, I'm saying that, look, prior to now, production was hovering around 1.2, 1.3 million barrels. Current numbers are around 1.6, 1.7, depending on different variables around the Niger Delta. That has always been a concern. Our budget is based on 2.1 million barrels. I don't think we've done that in 10 years, if not longer. So we're dealing with both a supply constraint as well as a pricing constraint. But there is something that has been a big fundamental shift in the Nigerian fiscal story, and that is around the reliance of our fiscal buffers on crude oil as its major source of revenues. The government has done a bit of work on diversifying, increasing tax sources, and I think that would dampen a bit the impact on the fiscal side. However, if you were talking to the Minister of Finance today, he will tell you that he's very concerned about the price volatility, and is also very concerned about our unstable production base. And you know that is not something we're going to fix in the short term. There's significant investments that's required to go into restarting production, improving the integrity of our pipelines, improving the integrity of our export terminals, and also improving the integrity of our refining capacity. So I think all of those variables are ones that the Ministry of Finance and the Ministry of Petroleum will need to put their eyes on. But I think right now, Nigeria is probably fine at current levels. But if we see any further deterioration, then the risks are obviously increased.
All right. And finally, we know that Saudi Aramco, they're delaying Nigeria's crude-backed $5 billion loan. What are your thoughts on this? Is this needed at this time? And, you know, we know that it's oil-backed. What should be our move with this?
Look, I mean, it's in the interest of Nigeria to raise capital. The reality is that we've been deprived of long-term capital for such a long time. And building this relationship with Saudi Arabia, which is one of the most liquid countries in the world, has to be positive for Nigeria. So it will be a travesty if this transaction does fall apart. My understanding is that there's a lot of work going on behind the scenes towards ensuring that the transaction continues and closes as planned. Obviously, you would understand that for a country like us who have had a long capital shortfall, additional capital will be positive for us, both from a currency point of view and from an infrastructure point of view. So this has to be seen positively, whichever way you look at it.
All right. Thank you very much for your perspective on the show. Femi Oladehin, Senior Partner, Argentil Capital.
Always a pleasure.